Good day, traders, and welcome to the video newsletter for July 18th, 2013. Starting with the fundamentals, the U.S. Department of Labor reported earlier that the number of individuals filing for initial jobless benefits last week fell by 24,000 to 334,000, compared to expectations for a drop of 13,000 to 345,000. Further, the Federal Reserve Bank of Philadelphia said that its manufacturing index rose 19.8 for July from June's 12.5 reading. Analysts had expected the index to decline to 7.8. Meanwhile, Fed Chairman Bernanke told U.S. lawmakers in his semi-annual congressional testimony that the stimuli program will remain in place for the foreseeable future, though they may begin to wind down later this year when the economy improves. Bernanke also stressed that the end to stimuli program does not herald the arrival to a tightening of the monetary policy, adding that the benchmark lending rates may remain at rock bottom levels even if unemployment rate approaches 6.5%, a level that the U.S. Central Bank has said would like to see. It seems that Bernanke is doing just about everything humanly possible to keep the markets calm and volatility low, and he's really doing a great job at it. Technically, the stock market finally broke the May 22nd high this morning. The market is officially in a bullish phase once again, and I'm more comfortable taking positions to the upside at this time as a result. I was afraid that we were going to have a strong resistance at these levels, but I was wrong, and the market broke through very easily on light volume, which is surprising. Earnings are driving this market, and two large caps released better than expected earnings this morning. Morgan Stanley stated that earnings were strong due to investment banking. If you recall, Bank of America and JP Morgan were also up due to investment banking. The second positive report was from Big Blue, IBM. The stock has a very strong market share and long-term influence on the economy, especially the computer sector. One thing that confirmed for me the breakout was a new high in the transport sector. I watched this sector carefully during important market points. The transport sector tends to lead when markets are at critical levels, so I focus on this ETF for directional clues. Another important indicator to focus on during market turning points is the SMH ETF. This is one of my favorite ETFs because, as many of you know, I started trading semiconductor stocks when I first began trading. I won't get into why or how because I don't want to bore you with my personal stories, but I'm very partial to semiconductors because of the volatility and because they are on the edge of technology, and many trading back tests show that they tend to lead the broad market by a few days, a good percentage of the time. Similarly to how the transports are ahead of the market by a few days more often than not. What's bothering me is the market is turning down very strongly, and I'm wondering if the rest of the market is going to follow in that direction, especially if earnings begin coming out weaker than expected, which may happen during the next week or so. I'll be watching this sector closely and will keep you updated as things develop. I'll be more concerned if we fill the gap to the 38.25 level, which is right below us. We have a new setup today in Boeing based on yesterday's inside day high setup. This is a very low risk strategy and the stock really took off today. I'm looking to take partial profit at the 108.25 level and the rest at the 110 level. I will keep you posted as things develop as well. Make sure you place your protective stop loss at the 104.30 level and leave it there as a resting order. Another interesting breakout to the upside is the crude oil market. The price of oil shot up to a 16-month high on Thursday on signs that the U.S. job market is in fact improving. I was very surprised that the market did not pull back after such a strong rally, and also warned that more upside is possible based on the trading action we're seeing right now. The fact that the range-bound trading action on this market lasted a very long time is a strong argument for continued momentum. However, the small divergence we are seeing between the RSI and the crude oil market is of some concern. Maybe not at these levels, but definitely when we get to the 110 levels. My first target was 108, which we reached now. We will see if we can have a last run to the 110 level. I'm giving fair warning that this market is going to have a pullback, but I do believe with strength of the momentum and lack of pullbacks, the 110 level will be reached. Just remember, divergence from RSI is not an everyday occurrence and occurs very infrequently because the RSI is not a sensitive indicator. There are a few setups for tomorrow. On the long side, we have an inside day on T-Mobile, ticker symbol TMUS. I would recommend going long at the 24.85 level, and if filled, place a protective stop loss at 24.25. The inside day is the lowest risk trade we offer, and I like the strength of this stock quite a bit. There is another strong flat top breakout that's also a 4x4 on Prudential Insurance Company, one of the biggest insurance companies in the world. Buy on a stop at 78.75, and if filled, place a sell stop at 77.40. I will guide you to the profit target if we get filled on this position. Lastly, there's a 4x4, which is also a breakout to the upside on two cable giants, Comcast, ticker symbol CMCSK, and Time Warner, ticker symbol TWC. Place a buy stop 10 cents above the high, and if filled, place a sell stop 10 cents below the low of these two stocks. That's it for today. Tomorrow's volatility is going to depend largely on earnings. Maintain current risk stop levels, and I will update you tomorrow in the morning. Have a great night, everyone.